This show does not constitute legal advice and is for educational purposes only. We are always available to field questions. However, until you have entered into a written agreement, your communications are not confidential and we are not acting on your behalf. Hi, I'm Sarah Holland and welcome back to Man vs. Land. Today I have Marcy Gowan Nobley of Union Bank with us. She is the Senior Residential Loan Officer. Hi Marcy,
Hello.
welcome.
Thank you so much for having me today.
I'm so excited to be talking about just the lending process in real estate because it can be very confusing, but it can also be a hurdle for folks to enter into homeownership. So welcome.
Thank you. Thank you. Yes, I think that we're going to talk about some myths that happen, some programs that are available for people, and just the process can be easier. And it's just making sure that you are working with the right people and have the right team.
Absolutely. Yes. And we sometimes are the best team, just saying.
Absolutely.
We work really well together and I don't know that we've had a super simple transaction, so we like to problem solve, which is good. We're good at it.
Yeah, we are great at problem solving. That is it.
Oh gosh. Okay. So let's talk about why, before we get into like the mechanics of financing, let's talk about like why you want to talk to your lender first before you start looking at homes.
Yeah, absolutely. So there are all different loan programs that are out there. So depending on the loan program, kind of depends on the type of house you can look at. So there's also a difference between just buying raw land or buying something that has an existing home on it. So knowing those aspects of it and knowing what your program that you're fitting into might work is a huge part of it, because it also helps your realtor. Your realtor's not just going out there showing you a bunch of things where maybe that house is not going to work for that loan program. So definitely having that communication allows everybody to figure out what's going to work.
Yeah, that's super important. I speak with buyers all the time and they like to talk about, like, if a house doesn't work for them, maybe they'll just buy a piece of land and put a modular or a mobile home on it. And that is a completely different animal that you also need to talk to your lender about because you may not qualify for something like that, whereas an existing single family home you may qualify for.
Absolutely, it is. It's different loan programs have different parts that go along with it. So definitely trying to figure out which part and which program might work best for you so that you're not jumping into something that maybe might not be realistic.
Awesome. So that's a good segue into like the different kind of buckets of loan programs that there are out there. Do you want to talk about those a little bit?
Absolutely. So we always say that basically we have your portfolio loans, which as a bank, we have those available. Portfolio loans might be something that either the borrower or the property might not fit some standards. So a portfolio loan means that the bank's going to hold on to that loan. It's one that's not going to be sold and it's going to stay on our books. So examples for that might be, maybe it is a manufactured home that might not fit all of the secondary market standards. That might have to go on our books and be a portfolio loan. A condo that might not meet some standards, that might be something that goes as a portfolio. Then you have conventional financing. A lot of people think that it's 20% down is conventional financing. That is a myth. You can do as little as 3% down, depending on income limits, things like that. We do have those available. Then we jump into your government loans. So your government loans, you have your VA for your veterans, as well as you are an active military. We also have your USDA. So those are going to be some houses that you fit into their income limits. And then we have FHA. So those three are basically our government loan programs that we have to work with. Then also land loans you have in there, which I would kind of throw under the portfolio bucket. So that's something that, again, a bank's going to do for you, and it's one that is going to stay on our books.
Okay, so a little inside baseball here because we talk lending all the time. So for those of you who may not have any clue what we just said.
Yes, and it can be overwhelming, which is why we are here.
Yeah, so when she's talking about fitting into certain guidelines, this is because when your loans are written at banks, they are packaged and they are sold kind of on the stock market, right? So, so that's a little bit of inside baseball. That's what she means by that. So if it doesn't fit into those particular buckets, then it falls into a portfolio program or it cannot be done. So that's what we mean by that. So it's not just this
set of rules that nobody knows what they are, but we're very familiar with what they are.
Yes, exactly. We have guidelines on top of guidelines that we look at to make sure that both the borrower as well as the house fit into those guidelines. So it can be very overwhelming for a borrower, but that's why you have us,
Yes.
is that we read these guidelines all of the time.
Yeah, absolutely. And then the other inside baseball piece is, it's the middle of winter, so we're not playing baseball. But the other piece is the government loan piece. And the government doesn't actually make the loan, they're insuring the riskiest part of the loan. So traditionally, we talk about 20% down. So anything that you're putting down that is less than 20%, that gap is what is being insured by the federal government in these different loan programs.
Correct.
So they also have a say into what the properties are, what the requirements of the borrower are. So we're adding in layers of regulation on top of regulation.
Yep.
So it can be, even though those loan programs are more widely available to folks that are more at lower income brackets or different credit profiles, they can be sometimes a little trickier to navigate, but they're all great.
They are. They're great. They're available to people, different borrowers. But yes, they do have all these different buckets that we kind of have to go through and figure out. And like we said, we're problem solvers, so we love to kind of figure that out.
And the whole goal is to get folks into homes, and that's
Yeah.
what those government programs are for. So we definitely you want to work with someone that definitely understands what those programs are and the limitations, so we can get you over all those hurdles.
Absolutely.
Yeah, so to add on to those layers, let's talk about some grant programs that are available.
Yes, absolutely. So at Union Bank, we do financing with New Hampshire Housing as well as Vermont Housing. So there's different ways. Each state has different guidelines. So New Hampshire right now has grant programs for their conventional, their FHA, USDA, and even VA right now. They can be up to $10,000.
Awesome.
In New Hampshire, it's a little different. If you have not owned a home for the last 3 years, in New Hampshire, you are considered a first-time home buyer again. So that allows you to qualify for some of these programs. So let's say you're doing a conventional loan. It's 3% down, and maybe you don't have that money available. You could qualify for one of these grants that is up to $10,000. As long as you keep the property for 5 years, there's no payment penalty, so you don't owe that money back.
Awesome.
If you were to sell within the first 5 years, then yes, you could owe them back that amount of grant money.
Okay.
So that's something to think of, but after 5 years, it is forgiven. Over in Vermont, it's a little different. So Vermont, a first-time home buyer is a first-time home buyer. Doesn't matter how many years you've gone without owning a home, you are a first-time home buyer only if you have never owned a home. So when I started doing Vermont housing, this was something different that I had to take into mind because in New Hampshire, it's a little different. So if you are a first-time home buyer in Vermont, you could qualify for up to $15,000 worth of grant funds. And then they also have programs right now. It's called the first generation. So if your parents, your grandparents have never owned a home and you are the first one buying in your family, you could qualify for up to another $15,000 of money that's forgiven right away. So it's definitely great. New Hampshire and Vermont have this program available. It's not taken advantage of, I think, as much as it should be. So it's one that we like to hear about and get out to people.
And these grant funds, my understanding is that once the money is gone, it's gone, right?
Technically, yes. New Hampshire and Vermont have not run out of that grant money.
Okay.
The first generation, there's a certain amount that was awarded. So I think it was $15,000 grants are awarded. They have not gone through that money. I think that Vermont, I looked at the other day, and they had 26 still available.
Amazing.
So that's for the rest of the year. So it definitely, it's available, it's out there. The same thing with the grant funds. It's never run out. It could potentially run out, but it has not as of yet.
Perfect.
So we're going to keep that, hopefully, fingers crossed, we don't run out.
So in short, if you are looking for some sort of down payment assistance, you need some other funds for a variety of things in a transaction, then now is the time to really kind of get in there especially if you're a first-time home buyer, for sure.
Absolutely. It's definitely the time to look, to talk about it, to see which might be available, to make sure that you're qualified for it.
Right.
There's income limits that go along with it, as well as purchase price limits. They are pretty high, I would say, for the state of New Hampshire as well as Vermont, but it's just making sure you fit into that mold.
Okay.
So it's definitely talk to your lender about it.
Yeah, absolutely. And this is, like you said earlier, the reason why you want to talk with your lender first. Or if you come and talk with me, I'm going to likely send you immediately to a lender, because I don't know how to help you until I know what you qualify for. So that's super important. And I feel like the biggest hurdle, money's a very vulnerable subject for people. So I think that having that conversation can be really tough, or asking or being as open as you need to be when you're talking about purchasing a property can be a tough thing for folks. So talk about your process of qualifying people and how you enter into initial discussions with them.
Yeah, normally we start off with what they're kind of looking, what's their hopes and dreams, what are they thinking? And normally this can be a lot higher than what they might be available, but at least we have something to work off of. From there, we kind of jump into employment, because that's a big piece of it. What are you doing for work? Are you self-employed and you just started last week? Or are you, if you're self-employed, we need a 2-year history. Okay. So that's sort of one of the things that we kind of figure out. Are you a W-2 employee? So you get paid 40 hours a week. We kind of start talking about that discussion. And sometimes, we have to piece together. COVID, luckily, now we're going into 2022 is kind of the 2-year piece. So luckily, a lot of people were back to work by 2022. So it's a lot easier than in COVID. We had some hurdles that we had to jump through with unemployment, but we're kind of past that now. So we kind of talk about that, and we kind of we're going to look at your pay stub, right? We're going to make sure that you're actually working the 40 hours. If you're working 30 hours a week, we're going to start to ask questions. At that point, we might even order a verification of employment. So we're actually going to go to your employer and say, all right, how many hours do you work a week? Are you guaranteed that you're going to continue? And, are they going to say that how much you're getting paid? A lot of times we work with nurses, love working with nurses, but we have to kind of figure out their piece of information, how much they're getting paid hourly, because they have different shifts. Yeah. So we talk about that. Then we're going to get into debt, which can be a little difficult. So we talk about your credit card usage. We talk about how much you're currently paying in rent. If you're currently paying $1,000 a month in rent, and we're talking about having maybe a house that has a $2,000 payment, are you able to accomplish that? We want to make sure that you're not going to be giving up something. We always joke, my husband and I, giving up going out to eat. Would I give up going out to eat and having to cook every night? Absolutely not. So that's when we kind of look at our budget and we kind of set expectations. I'm a bad cook, by the way. So that's kind of some of the things we talk about, what your budget is. Debt, we're going to look at student loans. Student loans have come out of forbearance. Okay. So we're starting to see payments start to show up. You are still able to defer them. Okay. So depending on which loan program will depend on how much we have to use a payment for. So we can't, unfortunately, use zero. So let's say you have a $50,000 student loan. We can't just say the payment's zero on it. We have to use some sort of calculation, because at some point that payment might come out of being in deferment. Right. So depending on the loan program will depend on how much we have to use as a payment. And then we're going to talk about assets. We're going to talk about how much is in your bank account. Cash on hand. So we always joke about money under the bed. Yes. That is not something that we can use for a down payment or closing costs or things like that. It has to be money that is in the bank that has seasoned in the bank.
They just want to track it. They want to know where it comes from.
We want to know, exactly. We want to know where that money comes from, that you're not borrowing some money, that Sarah didn't give me money and now I owe her money back. Right. So that's sort of the things that we're going to look for. We're also going to look for things that might not show up on your credit report, but we can see monthly payments. A big thing might be child support. You might not write on your application that you have a dependent, but yet we see every month that you're paying out something on your bank statement. So that's when we're going to start to ask questions like, do you owe someone? money that maybe didn't get put on your application, but we need to know about it. We also would need at that point a child support agreement if there's one there, or we would get a letter from whoever that parent is, just the amount that's getting owed to them. So there's different things that will go into that, but that's sort of what we look for, is what you're actually paying out, what you have for assets, and what sort of income you're bringing in. At that point, we kind of put together what your debt to income ratio is. So debt to income means how much you're bringing in as your gross pay to how much you're paying out. So we play around with numbers there to kind of figure out what you're going to apply for a house.
Now, the debt to income ratio, is that something that your bank has, or is that based on the loan program?
Yeah, so it's going to be based on the loan program. Government loans sometimes allow us to push up. So FHA is one of those programs that you're going to see us push the debt to income ratio higher. And sometimes it could be that your debt to income ratio is higher, but maybe we see that you're bringing in overtime, but overtime we can only count if you've had 2 years worth of history. So it makes us feel a little more comfortable when we're pushing those debt to income ratios higher, knowing that, really if we could use that overtime in there, it might be a little less. But yeah, so debt to income is definitely one of the biggest things that we look at, is to make sure that the income that we are using to qualify, so let's say Sarah and I are going in on buying a house, but my income's the only one that we're using. Unfortunately, we can't use your income, so it's just going off of my debt to income. So you can't say, hey, Marcy, I'm at a 75% debt to income, but I know I have Sarah's income. Unfortunately, on paper, it has to work.
Yeah. And I think that what is important to know here as a consumer is all of these rules are put in place to protect the consumer, as much as sometimes you don't feel like that's the case, because banks don't want to kick you out of your house. They don't want to take the house back. So that they want to make sure that you're going to be able to sustain it in the long run. And if anything comes up, like a major repair, that you're going to be able to take care of it.
Absolutely. And that's a huge part of it, I would say, is that our goal is not to foreclose on you. Our goal is to make home ownership happen to you and to make you successful.
Yes.
And not, foreclosure is the last thing that we want. Even I would say during COVID, nobody wanted to do it. We wanted to work it out with the borrowers. So I would say that we really try as hard as we can to go through that and work with you to make sure that it can happen.
Ooh, let's have that conversation.
Yeah.
So what happens if somebody's getting in trouble paying their mortgage right now?
Yeah, so you can definitely talk to your servicer. That's a great thing, I would say, to call your servicer, have that conversation. During COVID, there was certain things where they could move your payments to the end. I would say that's not something that we try to do right now, but depending on your loan program, there are certain things that you can go through and talk to your bank with or your servicer. So if it is a loan that is sold, so let's say you work with me, but your loan is sold to New Hampshire Housing. Let's say we do a loan like that. New Hampshire Housing is the one you're going to want to talk to discuss that. So it's definitely something that I would say call your servicer, talk about it. Sometimes you can figure out how to make maybe partial payments so that you don't get over that 30 days. Yeah. After 30 days, we do report you to the credit bureau. And that's never something fun or looks good on your credit report.
Yeah, and I think right now, as of this taping, there are some still, I call them COVID funds. I don't know that that's still the case, to help property owners with kind of past due bills, whether it's tax bills or mortgage payments or whatnot.
Yeah, so, electrical, fuel, things like that are available.
Yeah.
They're still out there.
Yep. And you just have to ask, and that's the hard part for folks, is to be vulnerable and ask for that assistance, or at least be curious as to if it's available. So don't be shy; it's there for a reason. And yeah, awesome.
It definitely is. So look at New Hampshire Housing. Go online, right there on their website. It goes over any of the assistance. So.
Okay, so can I talk about fair housing for just a moment?
Yes.
Okay, so fair housing, for those of you who may not know, extends to, it's kind of an umbrella of anti-discrimination throughout an entire real estate transaction. So everyone involved in the real estate transaction is bound by fair housing. Mm-hmm. These are federal laws. New Hampshire has some bolstered laws as well. But can you talk about that on the lending side of things?
Yeah, we definitely can't discriminate against anyone, no matter what your income is, your race, if you're disabled, anything like that. We aren't able to give any kind of different input, I should say. Or so basically we're bound by these. If you ever feel like any of us are discriminating, we let you know who to write with, who to call. But we can't do anything. You come to us, no matter what your income is, we're going to help you. That is our goal, is to help you. Whether we come up with a game plan today, whether we kind of discuss, maybe we need to work on credit, things like that. We're not going to say, I'm sorry, we can't help you, and just push you away. We are here to come up with a game plan.
Yeah, absolutely. And that's the beauty of finding a lender that you can actually work with, because you may not just be with them for a 30 or 60-day real estate transaction. You might be with them for years.
Absolutely. And we have had those people that we have had there for years that maybe they're just looking for the perfect home.
Yep.
And right now it is a competitive market.
Yep.
So they are going up against other people. So even if they find that perfect home, unfortunately, there's a lot of competition going into that. And that's fine. We love working with them. We kind of create like a whole relationship, like outside of just real estate. There's a relationship. I actually had a phone call from a client that I've worked with probably 5 years ago, and we keep in touch.
Yeah.
And we go out to dinner every once in a while. So we have relationships, and we want to keep you in that bubble. So
let's pivot a little bit and talk about a different loan program, because the market is tight right now.
It is.
So folks may be looking to like build. And
yes.
I hear that you guys have a great construction program.
We do. So I moved to Union Bank a year ago now. Actually, today's the 5th, right? So tomorrow.
Oh.
Yes, tomorrow will be a year at Union Bank. All right, so our construction loan is great. We can go up to 90% loan to value, meaning that if the whole construction, land plus the build, is a $500,000, we can go up to $450,000. So it allows you to do a lot. So allows you to not put as much money out of your pocket. How our construction loan works is you have a year to build from the time that we close on the construction loan. We are an invoice-only construction loan. So what does that mean is that we don't go out to the property to inspect every single time you're looking for a draw, which is huge because some places might limit you to 10 draws, meaning that you have 10 inspections, they have to go out, the work has to be completed in order for a check to be given. Us, the way it works is that the builder sends the borrower the invoice for whatever they're looking for payment. The borrower holds a lot of responsibility because they have to approve it. They approve it, they send it to me, I cut a check and send it to the builder. So it allows the process to move a lot faster. The nice thing is that, one, you're saving your builder money too, because they're not using their own money to fund the project. It makes it move a lot faster because it allows materials to get on site a lot faster.
Yep.
Once the project is 100% completed, we refinance you into a conventional loan. And then also if you do qualify for a VA benefit, we make sure at the beginning that we make sure that the builder is qualified for a VA build loan so that we can refinance it into a VA loan at the end. So it is an option. We're going to always make sure that you do qualify as a backup plan for a conventional loan, just so that we have it out there if for some reason anything was to happen. We would always have the conventional loan program available for you.
Ooh, that's lovely.
Yeah, it's amazing. It's a way for a lot of people that do have the funds available. I would say a build loan is the riskiest loan that normally a bank does, so we do make sure that everybody is qualified for it. Our debt to income ratio is going to be a little tighter than maybe a regular conventional loan. We're going to make sure that you do have reserves available so that if for any reason construction does go over, or maybe you say your kitchen's going to cost you $15,000 and then you find something you love and now it's $20,000, that you still have those funds available. But it is a great program right now because there is limited inventory out there. Yeah. So if you can't find your home, maybe you can build it.
I love that. I love that. I love creating new inventory and getting folks into homes that they want, because right now, like, I feel that the trends are kind of changing a little bit where folks don't want these giant homes. They just want something that is manageable because they've maybe grown up in a home that has been probably too big for their family and saw some struggles or just felt disconnected from people. So I love that folks have the opportunity to build what makes sense for them.
Yeah, what makes sense for them. Make sure that your utilities are down. If you're building a new home, there are grants available out there like energy efficiency. So it's definitely something to talk to your accountant about
Right.
as well, because maybe there is something out there that the IRS is offering to you. So those are the questions to also ask them. Like we said, it's a huge team that goes involved with this. So definitely kind of talking to that accountant of yours as well, bringing them in.
Yeah, and before we kind of cruise to the ending here, you and I have had conversations before about solar. There have been a lot more homes that are been on the market that are solar, and I feel like they're sitting because of the lending piece. What have you uncovered in your research based on the questions I've asked you previously?
Yes. So Sarah's asked me a lot of questions about that. Solar is still like an up and coming thing. So it's still a newer thing that's coming into the market. The big piece of it is that we have to find another property that is sold that is also solar. So that's one of the things that unfortunately is hard because you have to build those comparable properties. But it's definitely something that can happen. Right now, unfortunately, private mortgage insurance is not on board yet. So you are looking at putting the 20% down, and most of the time it's a portfolio loan. So it's one that the bank's going to hold. So Union Bank will hold that loan. You'll make your payments to Union Bank, and it will sit on our books. But it's definitely something that's coming up, and more, and I love it. But yes, these are for those completely off-grid properties that might not have anything available.
Yeah, and when we talk about off-grid, they don't have to be. They can be very modern, which is super nice. I mean, I have 2 properties right now that are off-grid, and they are they're new and
they're amazing.
They're amazing, and like, why wouldn't everybody want this? But it is the hurdle as new technology comes on the market, and like trying to get everybody all those little overlays to kind of work together, all those rules and regulations to be able to allow it is the piece. So
yes, and it's definitely every day there's new things that are coming out, new programs, new stipulations. So it's kind of just everybody has to get on board with what solar is coming to be, and then it's becoming more prominent. So I think that the market will start to shift a little, but it's just that it's not coming as fast as we need it to or want it to.
Yeah, it is a very slow moving ship. Awesome. So before we end, we talked a lot about the different loan programs, folks having these vulnerable conversations about finances, kind of talk to your lender first. What about why it's not over until you actually get your keys at closing? Like, what can happen?
Yes. So unfortunately, there's a lot that can happen. So one of the big things is don't change your employment. Or if you are going to make a shift in employment, just have that conversation with your lender. You are able to get into a house if you are moving employment. It's just we need employment contracts. We need to talk to that new employer. There's just different questions that go into it. So it's not something to hold back from me and wait until the day comes where we have to verify your employment and you're like, oh wait, I moved, I changed jobs. It's having that conversation. We check credit right before closing. We pull a credit cross check. That's going to make sure, A, you didn't max out your credit cards, you didn't go out. If anybody pulled your credit, we're gonna know about it. So if those things happen, it's just asking more questions. Well, what did you do? Sometimes we even have to get a letter from whoever pulled your credit stating we didn't do anything. They did move forward with us. So it's just knowing that we're monitoring that and having those conversations. Those are the big things that we see, is that people do that. They either changed jobs and they didn't tell us about, or they went out and did something. You buy a new vehicle, that can be harmful to it. You go out and get a new credit card, that could be harmful just because we're gonna need statements. So it might just make everything a little longer for the process.
Yeah, and everybody gets excited at closing, or they get excited when they are going to closing because they're going to have a new house, and buying a whole house full of furniture and putting it on a credit card or getting a line of credit. Like, it's super tempting. Do not do it. Just continue to hold your breath until you have your key and you walk into that house, and then afterwards you can breathe a little bit and do all of those things that might make sense to furnish your house, get a new car, whatever the case may be.
Yep, and I would say a lot of times right now, utility companies are pulling credit. So you're switching over the utilities, they're pulling credit. Just know that normally they send you an email letting you know why they pulled your credit or you were approved. Just keep that, just in case we're gonna ask that question, like, hey, why did so-and-so pull your credit? That normally is just because it's a utility. So just knowing and keeping that kind of record allows us to kind of move forward.
Ah, I love that. Thank you so much. So any parting words before we wrap this up today?
No, I mean, the big thing I think you should take away from this is communication. You need to create that team.
Yeah.
And I think we talk a lot about that team because there is a lot of information that I'm going to pass on to you as the borrower that either we want to bring the realtor in. Yeah. We want to bring Sarah in and be like, this is kind of what we've talked about, you know, this is the price point, this is the loan program, because each loan program, like we said, is going to have different particular things that you need from the house. So I would say just make sure you're open communication. There's never too much.
Yeah, and if you're working with a lender that you're not feeling comfortable in being able to be open with, then maybe find a different lender that works the way that you want to work, because everybody works a little bit differently. If you're a paper person and you need to sit in front of people to fill out applications, find somebody that will do that. If you're totally like, you know, super internet savvy and just
can do
everything, then that's great as well. So you are the consumer and you drive this whole bus, right?
Absolutely.
You have choice in everything, especially in determining who your team is and having the information to make all of the best decisions for your real estate journey. So I'd like to thank Marcy Cowan Nobley from Union Bank for being here. Thank you so much.
Thank you for having me.
Yeah, and thank you all for watching Man vs. Land, and we will see you next time.